Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday, it's September 21st. This will be our chart lesson for the day. And really, for all intents and purposes, this was another range day. Um, we ended up rallying pretty strongly after the close, or after the 2 o'clock hour. I shouldn't say after the close because the close is not till 3:15 my time. Um, but for all intents and purposes, we traded side we traded sideways until I would say this is when we finally broke higher at 2 o'clock, after 2 o'clock. So, but really for our trading purposes, we were in a range all day. And you can see it's pretty tight range actually. Well, I say pretty tight, but it's about a 10-point range, 1033 to about 1030 or 2143, 44 area. Um, so uh, we had a nice trend up and then a nice trend down, another nice trend up. Like we were going to have another one down after the news item. This in the purple is during the news item, so no trades in there. You want to be out maybe an hour before that, and then you want it to settle down and kind of be normal before you get back in. And that wasn't until maybe 1:30 or so before I saw another trade that was things were really starting to settle down right in here and look normal again. We were back in the range. We came back and tested the range highs, and then we were headed down again. So, um, and then of course we ended up bouncing off this trend line right here and going higher. So this really confirmed it here, and then you got another touch of it. Um, so we'll talk about those trades when we get to it. But let's move over, back out, go through the trades. And I think I made a comment yesterday that there weren't a lot of trades. Um, things are really looking more normal as far as price action lately. And so when I said that there weren't as many, there weren't a lot of trades, I really meant that based off of what we kind of had recently where we were getting, you know, 20, 30 trades a day with all that volatility and stuff. So things are kind of getting back to normal. So as far as a lot of trades, this is still plenty of trades and still a lot of trades, but this is more normal is the way I would describe this. And so I guess I should have clarified when I said not a lot of trades today. I probably should have clarified that, hey, I'm really talking about in reference to the recent price action that we've been seeing where we had a lot of volatility, a lot of movement, but things have slowed down and kind of getting back to normal, it seems like now. So this is a more normal fall type period. At least that's the way I would, that's just my personal opinion. So, but anyway, let's talk about the trades and we'll move on. Let me back out a little further so you can see it a little better. But we had a little spike and channel up, and then we had a channel working down. We had a break. This is the first, this channel here, this little trend working down is the first break of this spike here. So we're probably going to get a retest of the high, but when this thing moved down this strongly, I would look for a retest of this low before I went long. But really, all of this is happening before 7 o'clock. You can see 6:40, 7 o'clock doesn't come to right in here where I marked the first trade. So I was not here when all this happened anyway. If you were here, you probably would have taken that. That's a second entry short, looking for a new low. And then you obviously, you figure after two legs down, you may get a bounce as well. So, but this could just be a range day and we may just keep working down. I mean, sometimes that happens. There's no real overshoot of this channel. Well, I take that back. There is a little bit of an overshoot there. Nothing that really sticks out. And a lot of times in the overnight, you might get a break or an overshoot and you ignore it anyway because that stuff happens because the market's thin. The price action is not quite as strict on overshoots and trend line breaks and things like that as it would be during regular trading hours. So keep that in mind. But anyway, we're working down. We get a break. You get a first entry. It shoots right through the EMA, pulls back. We do have a new low in place, but at this point, I like this little higher low here. It's a little breakout pullback short from all that support across there. I don't have a line there, but it's there. You can see that. You could have it there or here, but I think it fit. The price action fits better. And you push through, pull back and test it. You get a little small bar. I would have liked it better if it ticked higher, but it still meets our criteria And at this point, I thought we'd probably come down to here, but it turns out there's really another trend line working up here. And so you could treat this like a failed break lower as well when it reversed. So I like going long right there. Um, and it does kind of confirm that trend line off those first couple of swings there. And it bounces right there. I actually had it a little bit higher at that point. Still fits there regardless, but I ended up moving it down later. Um, so you could have seen this as a break, but it does confirm it as well. And there's a little lower high right there, but I don't think I would have entered right there. This one I like, but when it didn't take off pretty quick, I got a little concerned about it. But look at it, eventually it takes off like a rocket, and you catch all these people off guard. But that's two legs down. There's your first leg correction, second leg right there. They're not really measured moves, but that's because, I mean, they're real close. Actually, it doesn't look that close, but it's within a tick or so of being a measured move. So you got your two legs down. So on a bigger picture, this is a second entry long off a trend line. So I like it. I don't. You probably could argue for that one to be green right there, but I'm not crazy about that one because it's still a very bullish bar. All three of these are really bullish bars. So, and it's still closing near its high and within that trend line. So yeah, if you didn't enter here, you could. I think it's a little more aggressive here. I like it better down here, but it looks more sideways there is the reason I'm a little leery about it. And you're still below the EMA. You're getting back closer to the support area too, so it could touch that and push down again. But I like that one. And that turns out to be a really good trade. And then, of course, we make a lower high here and we start working down. But here we have another little channel. You get a break and you low. And where does it bounce? Right off that trend line again. Just go long right there. And off it goes. You got plenty of room to get out before the highs, both these double top and the original overnight high, which is probably what we're going to test, the overnight high. And originally I had this line down here because that was your overnight low. But once we bounced there, of course, I moved it up, and then I ended up pulling it back down right in here because that's where you get the most touches by the end of the day, right in there. So that's why it's there. But anyway, then you push up, and of course it finds resistance right there where the overnight high is. So this is really looking like a range day at this point. You can't rule out that this two-tier channel may not be the bigger pattern, but at this point, when you can't get through there, and then it pushes up, it's a little ways away from the EMA. A real small, low-risk bar. It broke above the highs of the day. So it's probably going to pull back, even if it's just coming back to the EMA. It's a little bit aggressive, so I marked it as such. And it does. It comes right back to the trend line, and it tries to bounce. And you can see this is what causes wedges. People think, there is no such thing as a wedge, in my opinion. And you see all these textbooks that teach you about wedges and so forth. All a wedge is, this is two patterns converging with each other. That's all it is. You got a range with strong resistance, and you got a channel working up, and that's what causes that wedge right there. And most books and things will teach you, to trade whichever side it breaks out on the wedge. But if you do that, you would have lost here first before and then it breaks out on this side and went lower. But notice, so you would have lost before you caught one. Of course, eventually it does go on down, but at first it breaks out the upper side, so you get a loss there, and you might have got in here and then got stopped out again and had two losses before it actually does what you expect it to do. So if you follow the price action rules, you're much better off. And notice what happens here. The range is holding, and at this point I would call the range the stronger pattern, especially when it breaks above, comes back and it can't get through, and then look at that real bearish bar when it breaks above that little triple top right there. Breaks higher, turns, and goes right down out the other side, gives you that huge bearish bar. I wouldn't trade this one. A lot of times I like it when it goes out one side and traps people and goes, I'll have a stop waiting there. I wouldn't have done that on this one because I want to see what this signal bar looks like. That's a very nice signal bar. Notice that gap in there. You may not have been able to get in that one. But I would have dropped a limit order and hoped it come back, and it would have come back and filled you here. Um, so, and giving you another chance. But I don't know if I would have waited on that one. I would have waited for this to close. And notice what happens here. You push straight through the EMA and you make a new low. You take two legs back and you get a second entry right there. So I like that one. It's a double top. It's a lower high than that. Um, it's a breakout pullback short, a second entry short. A lot of reasons to like that one. It's not perfectly bearish, but it's enough, and it's below the EMA. So you figure you're going to get at least a leg like that, and you may be going to the other side. Of course, then it takes off lower, pulls back, gives you a failed second entry long. It's not quite back to the EMA, or I'm sorry, the trend line. Of course, it's not back to the EMA either, but the trend line is the more critical piece here. It could be that I just don't have it drawn quite steep enough. It may be a little steeper than that. Let me just try to redraw it. I may not have, I might have been off a little bit there. So yeah, maybe. So I could have just been off a little bit. Yeah, and there's that gap, and there you put your line right there. It fits right down through there. So I may have just been off a little bit. So that really looks much better there. I think it's that right there with an overshoot and it gaps, because those gaps will a lot of times help you to get your lines in the right place. So I like that better. I just had it drawn a little too flat. It's a little steeper, and that gives you your second entry short. It's right into the low. But this is a range day. It is a failed second entry long. There's a lot of different reasons to kind of like that one. But it's not the greatest setup. So your entry would have actually been one tick below this bar. Although this is your true signal bar and your stop has to go above, right above this bar. But this is, your stop would go right there. Quick, easy move. Then it bounces. And now you get a close outside. You do get a push to a new low, but a lot of times you'll get two legs, and we're not down to the low yet, so I wouldn't go long here yet. It pulls back. It does turn down right there, so I kind of like that one, but it's right into those lows, and there's not much room, so I did make it green, but you're looking for a new low. But if you did enter here, notice what happens when it bounces here. It starts going sideways, so you could have got out of this on 1, 2, 3, 4, 5 bars with a tick or two before. Actually, you never would have gotten stopped out, but once you start seeing all those bars going sideways and can't get through, I would have exited with a tick or two or whatever it would give me there. You get another chance to get in here when it breaks higher, and that's your double test of this high right here. You could treat that really like a failed second entry long and a nice bearish bar. Again, everything's still below the EMA. I like entering there, and you could have actually add on there because that's definitely going to trap some people. When I guarantee you, people got long right there when it broke high, and look what it did. Boom! It drops down instantly, and it meets this last low right here and kind of makes a double bottom. Then it drops on down. You don't want to be getting short way down here this far away from the EMA. You want to look for a possible long. And it made a low there and then made a little double bottom and a small bar bullish. I like that one to ride it back to the EMA. But it just shoots right on through. And that gets you into the hour before the news. But you can see the price action still worked. We made the first two swings, and then we made a third test of it, a bullish bar. And then even during the price action, look what's happening. It's holding within the channel. It does end up overshooting it a couple of times here before it drops back in. And look, when it came back in, it pulls back and tests it. And then it's still bouncing off here. And you got this huge overshoot, and it's back inside the channel. And the channel holds and gives you that first short right there. And that's a second entry short. There's a new low. Pull back first entry, pull back second entry. Big bearish bar. Again, your stop would have to go above this one, but I would have let it break below this bar and drop a limit order a tick or so back, and you probably would have got filled on it, and it just kind of drops on down. And where does it bounce? You should have drawn a trend line off these first couple of swings here. It bounces there. We had a close outside this channel, a move to a new low. We're a good bit away from the EMA again. Look how bullish that bar is. Go long right there. And then there's a higher low right here. Plus it's off the trend line, so that's another reason. So then we're still off the trend line again, a little a higher low. Second entry, I like to call it, but it's just a higher low basically than this low. And so we're probably going higher again. And boom, off it goes. And where does it find resistance? Right up here. That's very neutral. You don't want to go short there, and you get a little failed breakout. That's your first high, and it's still bouncing. You got this trend line off those first two swings, and so this confirms it, but it's right into that high. So I would wait on a higher low, and then you get that here. So when it broke above this bar, I like entering there, and you actually could have used a limit order, but I'd probably just use a stop, because at this point this line would have gone higher. I'd probably have it right in there, and that gives you enough room to get out. And you can see it pushed right on through there again, made a new high, and that got you into the 2 o'clock hour though. So but yeah, you were mostly, you had a couple of trends within the range, but this was mostly just a range today. And again, we ended up rallying pretty strongly. I guess they liked the FOMC news or whatever, but that was all after 2 o'clock, and I just think you're better off to, not trade after 2 o'clock, because too many crazy. But this does show you get good trends and good movement after 2 o'clock. So not that you can't trade it, but my theory is, and you usually don't get a lot of good movement in the afternoon after 2 o'clock. The volume tends to drop off after 2 o'clock. There's still plenty of volume in the ES, but it does tend to drop off, and you get more fake outs and traps and things. And so I generally just avoid it, and I think that's the best move. So yes, all in all, pretty good trading day. Plenty of trades again today. And if you really wanted to hang in there on this trend, sometimes when you get trends like this, you might, especially if you got a runner. If you got a runner, don't exit this. Let it keep running. And somebody sent me, that's one other thing I wanted to read an email I got today. I saved it. Trader sent me an email. And he basically says, despite the heightened volatility, had a nice picture perfect short set up, and he describes it and sends me a picture of it. But what I wanted to share with you was at the bottom, he says, confession time. I was resisting, let me reword this a little bit because it's kind of confusing here maybe, but basically he's saying I'd given him, basically he'd asked me for some advice on runners. He was having problems with runners, and I told him I said, really, if you want to use runners, you need to change your math a little bit. If you're just doing two contracts and you trade one and you take one off and save for automatically the scalp, and you save one for a runner, the math is not real good there. So what I like to do is be able to trade maybe say at least 3 and scalp out of 2 and save 1 for a runner. But if you can trade 5 and scalp out of 4 of them and save 1 for a runner, or even better, you can scalp out 10 and take off 8 and save 2 for a runner. Or maybe, when you really get up there, say you're trading 20, scalp out 15 of them and save 5 for a runner, because that really, really changes your math. So you don't have that 1 for 1 like if you're just trading 2 contracts, because your math is not real good at 1 for 1. So if you're just going to do that, maybe you're better off scalping out if you're going to trade 2 contracts. Wait till you can do at least 3 and then take 2 off at the scalp and then save 1. And that really changes your math. But anyway, go back to his email. That's what I recommended to him. And he came back and say, I was resisting taking off most of my position at 2/3 at 4 ticks. He says, I was always looking for runners of at least 8 ticks, 1 times my risk. And I kept getting stopped out, and I didn't have very consistent results. I decided to trust you and try your method and take 2/3 off at 4 ticks and then trail my stops on the remaining to break even and let it run until it just reversed on me. He said my results have been a lot more consistent since that point. Small loss days, small winning days with occasional large winning day. No big loss days anymore. A very positive change. So I thought that was worth sharing with the group. And I talk about that from time to time. I know I do not talk a lot about exiting. And the reason I don't is because it's personality based. I like to get in. I'm pretty good at picking the entries. And so I like to get in and out. I don't like to enter, just as an example right here. I don't like to enter. Well, let me find a better example than that. Let's say you took one of this trade right here, and you could have ridden this all the way down, but you had to ride this out, and you probably would have gotten stopped out on your break even here or here, and so for any runners. So I don't like to let my watch prices go all the way down to here and see maybe 3 or 4 points worth of profit only to watch it come back and take it back again. So what I'll probably do is as soon as it reverses, I'll exit, or if I think it's reached a measured move or something, I will exit. And here's a good example of one. This was your first leg down. And so your second leg is going to go to about right here. And see, we reversed off of that, off to a measured move. And you pull back and it stops everybody out, only to go straight down. So rather than watching it come back and take all my profits back, I just exit here with all my profit. And then I'll look for another entry. But some people aren't as good at picking the entry. They want to get in a trade like right here and ride it all the way down to here. So that's what I mean by it's personality driven. I can't stand to watch it come back, where some people can watch it come back and they're just as calm and as mentally stable, because so much of what we do is mental. And so it messes with my mental aspect, and I start getting nervous and making mistakes. So I just exit and take the profit it gets me, and I look for a new entry because I'm good at picking the entries. So that's my personality. So I'm in and out more often, where some of you just can't. You just can't do that. You're not very good at getting in and out, and if you do that, you're getting whipsawed and everything else. So you like to find a trade and stick with it. So you got to use the strategy that works the best for you. So I hope that's real clear. I hope that makes sense. But that's why I don't talk a whole lot about the exits. Um, if you're not good at catching runners and you can't use the right math and use multiple contracts and try to scalp 2/3 and hang on to the third, then you might be better off just to scalp out in full until you get pretty good at it. Because that's what I did for a long time. I would just scalp out in full because I couldn't stand to watch it back up on me, and I wasn't catching a lot of runners. So I just would scalp out in full. But as my math got better, it didn't matter if I trade in 20 contracts. If I can scalp out 15, I did pretty good. It doesn't hurt my feelings too bad to watch 5 of them back up and take my break-even runner, especially when I can catch 5 like right here and ride it all the way down 3 or 4 points, because that really adds up. You catch 5 and catch a run like this and run all afternoon, those 5 will probably make more than all your scalps did all day, plus maybe some the day before. So it really can change your math if you could catch runners, but if you don't do it the right way, it can change your math negatively. So that's why I don't talk a lot about it. But this day's video is getting a little long. I'm not going to beat that horse anymore. But I hope you had a good trading day. We'll be back again to do it tomorrow to wrap up another week. It's hard to believe I'm saying that, but the days are just flying by. So, I'm done for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.